And it's been a year to the day since Facebook's public stock offering. From the start, there were some problems, technical trading malfunctions, to industry doubts that the company's young CEO could keep revenues growing. And joining us now with more on what the future holds for Facebook is Denmark West. He is an advisor with private equity firm K1 Capital Management. Denmark, thank you for joining us tonight.
Thank you for having me here.
So Denmark, a year in review, what would you say are some of the highlights, big successes and big failures?
Well, I think that there was a pretty big splash in terms of the IPO. There was a lot of anticipation, there was a lot of hype, and then they had four big challenges. They had the market challenge associated with the NASDAQ inability to reconcile purchasers with available shares. They had the valuation challenge.
Yeah, technical glitch, never a good way to start things off, right?
They had the valuation challenge where they were pricing it pretty far above where the market comparables in terms of Apple and Google were, both from a price to earnings perspective and from a growth perspective. They had the challenge in terms of the questions about the business. So how are they going to handle mobile, and how are they going to handle emerging growth markets in terms of how do you actually get the users there and how do you actually monetize it effectively? And then they also had one last issue, which is around the trust issue associated with the way that the leadership handled the IPO, and
right.
et cetera.
It didn't help that a lot of the founding members cashed out their stock as soon as they could, and that's probably one of the reasons that we've seen the stock down 30% since its IPO. So do you think that there has been any one major success in this year?
I think that they had a very big success associated with the acquisition of Instagram. I think if you look at the mobile challenge that they faced at the IPO, one of the biggest questions was, well, Facebook is really an awesome social platform, but the question is, how are you going to manage this growth in mobile as an access platform? Instagram was primarily, if not totally, a mobile-based social platform based on photos, and it actually served to protect them from what was seen to be a potential shift from Facebook to applications like Instagram. There were only 30 million users at that time. I think the latest report says it's over 100 million. So they did a very good job of creating a defensive proposition to protect their flank on users. The flip side of that is Instagram is a place where they don't monetize particularly well, if at all. And if you do have a share shift, the benefit is they're still in the Facebook family, but the downside is you're not making any money off of it.
Well, Facebook recently launched Facebook Home. That has not turned out to be so successful.
I think one of the challenges when you're an innovative company is that you're going to launch things that actually just don't go well, right? If you think about Apple, they had this product called the Newton several years before they came out with the iPad. And it was an interesting personal information management. It had the concept right, just didn't have the form factor right. But you're going to have those things go wrong from time to time.
But the big question is, can Facebook monetize its user value? You've mentioned that mobile has been a bit of a challenge because it doesn't have enough ad space. Have we seen an increase, any real strategy to monetize the subscribers?
So I think that is indeed the open question, and that's part of the reason why you haven't seen the stock take off despite the user growth. The user growth statistics suggest that this is actually a more interesting play than the stock would suggest. And so the issue is, if you're looking at the way Facebook has traditionally managed their business, they focus on getting users first and figuring out the revenue model later, and this is still an open question.
Yet, according to Pew Research Center, released in February, a study showed that 34% of Facebook users are spending less and less time on Facebook. So there's this talk of, has Facebook lost the cool factor?
So that is actually a great question. And for me, I think what separates Facebook from other companies that are in the social media graveyard, like Friendster or MySpace or others of that ilk, is that those were actually destinations, whereas Facebook is actually a platform that's based on data.
Right.
Both utilization as well as authentication. And so they monetize that, but the point is they're trying to make their money off of the platform. If you look at their acquisition of the Atlas platform from Microsoft, the ad platform for display. If you look at what they're doing with Parse to be the back end for mobile applications, those are all things that are much more about business-to-business activity as opposed to the direct consumer interaction, and that's where they're going to try to actually make their money.
Now, Rupert Murdoch has warned that on Twitter that Facebook will go the way of MySpace. Agree or disagree?
So I disagree pretty vehemently because I think the challenge was that MySpace was a destination. And as such, you're basically playing the MTV game. You're trying to be cool and you're trying to stay cool. That's a very different proposition than being a business platform that's predicated on data and how you actually interact with an ecosystem.
Okay, very quickly, where do you see the Facebook share closing?
Today? No,
Well,
I'm joking.
what's your outlook?
I look at this as a story where people are going to look for results. They've done a very good job of hitting their earnings and revenue targets. They haven't had the big splash that they need. I think this is an early, a low 30s stock in the next year.
Okay, well, we're going to have to leave it there. Denmark West, an advisor with K1 Capital Operations. Thanks for joining us.